Greetings from beautiful Dubai, as you can see, back in town, and now from our beautiful new terrace here with this amazing view. And yeah, it really feels amazing to be back, even though I must say it's still extremely hot, but getting better. And I think from second half of September should be really lovely. And yeah, but honestly, super excited to be back here. And we're still settling in. I mean, I'll give you a quick, just a show of the living room over here. You can see still a lot to be done. And you can see we're really happy to have our lovely little doggy with us. Nutella, how are you? Everything is okay? She's also struggling a bit with the heat, but getting there, getting settled in. But yeah, I mean, as you can see, still a lot to be decorated. And that's why I'm not going to give you a full house tour, even though you can see the sweeping views are incredible. So I think I'll probably best do this once we really settled in, everything's set up and ready to go, and I'll give you a full house tour, also to show you the complex, what it has to offer, the pool, the gym and so forth. So you get an idea what you get for your money over here in Dubai. But yeah, we're really happy with the place. Took us a while to find it. We obviously rented it unfurnished, so now we have to buy all the things in here, but I think that way you can also bring in your own style. So I think it will be really exciting. So a lot to be done, but that also brings me actually to the topic of today, which is why I really love investing on autopilot and automating as much as possible in your everyday life, but especially when it comes to investing, because I still see so many people who really ask me all the time, Kai, which stock should I buy? When should I buy? When should I sell? And they spend so much of their time, dedicated towards that, which is great, don't get me wrong, right? Some people don't even care about investing in the first place. So I'm happy that people take the initiative and want to buy the right stocks and try to market time. But in many ways, actually, quite frankly, you're really, in a way, wasting your time, because the chances that you're going to be outperforming the market are very slim to none over a longer period. Now, you might outperform the market, and when I talk about the market, I usually talk about the S&P 500, which is kind of the benchmark. But if we talk about a longer period, most people will underperform. Even professional investors underperform. That's why people like Warren Buffett and other super investors still have some part of their allocation in the S&P 500, which is really quite interesting to see, because they know it's very difficult to outperform that. And at the same time, that takes time away that you could be spending on your health, with your family, on increasing your earning potential to invest even more. And I think that's why there's better ways to go about it. And that's why personally, I really automate my investments as much as possible. And I do it actually in two ways. So let's talk about those two ways. And in the end, I'll share with you why I do that and what it allows me to do by automating what I can focus on instead. Now, the first one is obviously automating my investment choices for me. Now, I used to start investing in individual shares. Then I went with dividend shares. I had P2P investings and really always try to find what works best, right? And what can give me the best returns. And over time, I really understood the power of looking at total return, right? It's not just the part of the component, which is, of course, the interest or the dividend. It's the total return that you get from your money. That's really what you want to be focusing on. And ultimately, well, what can I say? All roads lead back to the S&P 500. These are the 500 strongest companies in the US. Now, if you want to invest in Korean markets, in Chinese market, Indian markets, that's also cool, right? Personally, I don't really understand too much about them. And American market, well, I use majority of their products every day, right? Tech companies, we all know them, we understand them, they're transparent, they have to report quarterly. I lived in China, things work a little bit different over there, right? So, I feel comfortable with that. And as I said, long term, over 30, 40 year period, they return anywhere from 8 to 10%, which I'm really happy with, right? So why would I, try to outsmart the market spending hours unless it's your professional career to be a trader? Otherwise, I think you're just wasting your time. Put your money in there in a low cost index fund, and very important to keep it low cost. And they passively manage your money. In my case, I pay 0.03%. basically to have my money managed in those 500 companies. And it doesn't matter who is the number 1 company, number 3 company, number 5 company, it's automatically being managed in the background by the ETF provider. There are many out there like Vanguard, BlackRock, I use State Street, so different providers of ETF, exchange traded funds, and there are different ETFs also out there. You can invest into the S&P 500 fund, you can invest in the biggest European companies, in AI companies, right? Of course, there can always be different ways how they compose the ETFs, but usually is by weighting. So meaning the most valuable companies are at the top and the least valuable at the bottom. And if they really become, not relevant anymore, they're out of the index and another company comes on top. And that way I don't have to worry who's the most valuable company, maybe buy more of that. If they drop in value, sell it, buy something else. it's basically done all passively for me automatically, right? And all I have to do, basically continue to invest in dollar cost average into that ETF every single week or month, depending on your preference. I usually do that every week, but it's really up to you. And that way it's set it and forget it. I don't have to follow the companies. Are the earnings good? Are the earnings down? Some people are obsessed with Tesla, right? And they have to track how many cars have been sold, regulation changes. There's so many aspects that you would have to follow if you invest in an individual company that for me just take too much of my time, especially as I mentioned right now, moving between two countries, right, settling into a new place, so many things to do. I have so many things on my mind. The last thing I want to be doing is studying the company reports and earnings day to day or following regulations. I think that's just a great way to go about it if you want to really set it and forget it. And the second way how I automate my investments is obviously the actual purchasing, right? Now I know what I want to buy, but how do you actually do the buying process? And there are different ways. And honestly, most brokers these days should be offering you the way to automate your buys. Meaning, you say how much you want to buy, either the number of shares or the monetary amount. Let's say you want to buy, every week $500 worth of stocks or ETFs. You can say that, and then obviously you have to stipulate which stock or ETF you want to buy and on which day and how often, right? Daily, weekly, monthly. And then it's just set up basically. All you then have to do is make sure you have enough money in your account so the broker can buy that on your behalf. And I think that's the really easiest way, because let's be honest, otherwise there's always going to be periods when you say, oh, I forgot to buy this week, I'm going to buy next week. Or I forgot this month, I'm going to buy next month, and then next month, and then next month. Or you don't have enough money that month, let's wait for next month. And you kind of postpone it. And that way it works against you, because you want to be invested in the long term and benefit from increases over time. And the less time you invest it, the less time your money has to work in your favor to compound positively over time. So that's super, super important. Now, I personally, in the past, mostly bought manual, and I'll still continue buying manual as well, because I just like to do it and check once in a week. But even now, as I said, in the times when I travel and have a lot going on, I still have a little automation going on. For that, I use Lightyear currently. So there it buys me every week S&P 500 ETF, and I'm really happy with this, set it and forget it. I did the same actually a while ago with Bitcoin as well, when it was kind of more or less flat. Right now we see a bit of fluctuation, so I kind of stopped my automatic buying, because obviously some days it can be up quite a bit, other days down quite a bit. So actually right now I have some of my money sitting on my Nexo crypto exchange, which is my crypto exchange of choice. Really love it, very easy. So I have some money sitting over there in the form of USDT, which is a stable coin. Basically it's a digital dollar if you wanted to. And every time I see a bit of a dip in the Bitcoin market, I just convert USDT into Bitcoin and I have some more. And then eventually when I have a bit of value sitting over there, I move it from Nexo into my Ledger hardware wallet. So it's safe over there. So you really see, I really automate as much as possible. So even now, when I didn't have time to manually buy something, I know I still make my purchases. And that's just the simplest way to go about it. And if you want me to make a dedicated video reviewing the different platforms so you can automate it, like Trading212, Lightyear, Interactive Brokers, then comment down in the description below, and I'm happy to make such a video in the future. But yeah, basically that way I really have it set it and forget it on autopilot, knowing that my money is invested and growing for me over time. And that also allows me to A, as I said, focus on my day-to-day life, because life happens, right? We're all busy, we have things to do. And B, I can focus more on revenue generating activities to build my business. Because that's also something that people sometimes confuse a little bit. They spend so much time trying to optimize their investments, which is important, right? But I always say at the same time, if the amount that you have invested is very little, then quite frankly, it doesn't really matter whether you get a 9% return, 11% or 12% return. 10% on 100 euros over a year is still only 10 euros, right? So again, you want to focus on increasing the investable amount that you have available. So on the other hand, if for example you manage to increase your income and have now 10,000 euros in a year to invest, right? 10% of that, all of a sudden your portfolio grows by 1,000 euros per year. So obviously, eventually, sure, you want to have higher percentage. Nobody wants 4%. Instead, we all want 8, 9 or 10. But I'm saying is, try to focus more on growing your income, because that will have a much higher impact on your total portfolio growth over time than having a small investable amount but managing to increase from 8% to 12%, which, as I said to you before anyways, it's going to be very difficult in the long term to outperform the markets. It's very unrealistic that you're going to have 12, 13, 14% in the long term. So better focus on the income component that you have investable, and then lean back, set and forget it, invest into some safe investment. Maybe if you want something a bit more risky with potential higher upside, of course, like I do as well, right? That's what I have my Bitcoin for, because I think it might potentially outperform the S&P 500 in the longer period. But that's just a bit more speculative. I understand that. My biggest focus is to grow my S&P 500 holding long term. And then, of course, I have my real estate here in Dubai. Let's really set it and forget it. I actually also have a company for that I pay a small fee, but they manage everything from finding the tenant, collecting the paycheck, sending the money to me. If there's any issues, maintenance related, whatever, they handle all of that. They just update me by email and they have nothing to do with this, right? Some people, they like to save that money and instead do everything themselves. And if you're not even living here, I think it's very difficult to get a call when I'm in Europe. Somebody calls me from here. I have to find a handyman who can fix these things. So it's very, very difficult. And for me, that little fee is definitely worth my time. So once again, I can focus on my own life and more importantly on growing the income that I have. So guys, I really urge you to have a look how we can optimize and really more importantly automate your investments as much as possible so you can focus on what matters most, living your life, investing in your health, spending time with friends and family, and of course ultimately, crucially, to increase your earning potential, maybe from a side hustle that you're starting off, maybe from working harder at work to get a promotion, maybe from starting your first business and start getting more money. This really matters in the long term rather than trying to optimize and outsmart the market, which long term is going to be very, very difficult. All right, friends, hope you enjoyed the video. If you did, please give it a like. Helps the video to be seen by more people. And in the future, hopefully soon, I have some furniture and some desk here so I can go back to my regular style of videos. Thanks a lot for watching. Stay healthy, get wealthy, and I'll see you in the next one. Ciao.